Hello and welcome to Wall Street Wire News, where you get today's market in minutes. Hi, I'm Dave Okenquist. Joining me is a former Wall Street bond trader and special contributor to Wall Street Wire News, Mr. Rodney Johnson, and coming to us from a beautiful outdoor location, Mr. Charles Sizemore, the editor of the Sizemore Income Letter. Gentlemen, good morning. I want to start right off the bat with kind of the market chaos that happened yesterday. The Dow fell over 500 points as bond yields spiked. Rodney, I'm going to throw this over to you first. Is this a sign of things to come?
Yeah, could be. In the bond market, which is what you had to watch for this one, there are Treasury inflation protected securities, and so what happened yesterday was that the yield on the shorter maturities in the TIPS market went higher than the yield on the longer ones, and so it created an inverse yield curve in this weird inflation area, measurement for bonds. And so that inversion created a weird situation where investors were telling you they expect inflation for the next 5 to 7 years, but not after that. And so this is all about near-term stuff. And we all know it. It is the spending 1.9 trillion that's probably going to go through today. It is the 900 billion from December. It is the 2.2 trillion from last March. It's all that wrapped together. When you look across the globe, around the globe, governments, commercial and household have added $24 trillion in debt in the last year, 24 trillion. And so 18 trillion of that is in developed nations by governments. And so there's a lot of spending. It's trying to get through a very narrow gate into economies. And so it creates inflation. And so that's what people worry about. And so they are looking to reallocate a little bit away from risk assets to what will be higher yielding bonds eventually. So is it going to happen every day? No, but this tends to happen in stutter steps, right? It's kind of painful when it happens. And then you look back and go, oh yeah, rates were going up. And so stocks took a hit. So that's what's going on.
Charles, your thoughts on the carnage yesterday?
Yeah, I would agree. It's the same. The biggest fear to really all risky assets right now has been what happens if inflation picks up and the Fed has to slam on the brakes. I don't think that's what's happening, but there's that fear, right? Like people ask, what causes this market regime to change? It's not valuations. Valuations have been stretched for a long time and just keep getting more stretched. This market right now is still primarily driven by Fed stimulus and by government deficit spending. Like that's a lot of money just plowing into the markets and plowing into the economy. So the question is, okay, great. What stops it? Well, what stops it is the Fed decides to pull back. So when you do have any signs of inflation, people just sell first and ask questions later. Now, if you ask me, what is the risk of inflation? I think it's going to look, we're going to see some inflation over the next couple quarters because the comps are horrible. But longer term, I don't see it. You look at Japan, you look at other fairly recent examples, and government debt by itself does not create inflation. In fact, Lacey Hunt and others would argue it actually creates deflation. So I think I agree with Rodney. I think this is more of a short-term phenomenon. A lot of money trying to go out the door all at the same time. I don't think it has staying power.
Great. Let's move on to some other news.
So before we walk away from that, I do think there are years of this in front of us, and I'll tell you why. I'll push back just a little bit there. The Federal Reserve has moved its language from, hey, inflation is okay and low, to we're all about labor force. And this echoes what the new administration is talking about, which is we need people back to work. And we're in a period not of cyclical unemployment, but structural unemployment. And so cyclical, the whole business cycle goes down, lots of people lose their jobs, blah, 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 right? Structural, you have the wrong people unemployed. And that's where we are. A lot of frontline workers don't have jobs. We're going to reopen the economy. They're not all going to get their jobs back. But at the same time, we got a lot of people in Ohio that manufacture stuff who can't get employees. They do not have enough workers. And so that's going to lead to wage inflation, as we've talked about before, this wage push inflation thing. And so I think there's something to this because the Fed is telling us they're going to let this go a long way before they act. And I think people they're starting to see that and say, wait a second, the Fed isn't going to say outright we're not going to raise rates, but they're doing everything but write that on the wall that we can count on very low or near zero short-term rates for years. And that's the thing people are looking at. And when we finally undo these economic sanctions, people have cash. They got a ton of cash, and they're going to go spend it. And when they do, they're going to push up the price of hotels and the restaurants that are left, and airplane seats and everything else. And so
the three restaurants that are still open.
I'm sorry. Yeah, exactly. The point, the restaurants that are still open are going to have more business than they know what to do with. And so I guess to the point, I don't see it as short-term in terms of months. I see it short-term in terms of years. And so there will be some adjustment to that. And it's going to take, some of the bloom off the rose of risk assets for a while.
Well, what's interesting is, labor, when you have a mismatch in, companies looking for labor and pools of labor looking for a job that aren't necessarily in the same place, that doesn't get fixed overnight. If,
Exactly.
Ohio has a ton of jobs and no workers, and I don't know, pick a state at random, Texas has a lot of workers with no jobs. Getting people to move from Texas to Ohio doesn't happen in a day. You have to dangle the paycheck in front of them, and it still takes years.
Right.
So it is a
At
slow.
all.
Well, it may happen eventually, but think about it. You have seen a slow exodus of people from California, for example, coming to Texas, but that's a multi-decade trend that took a long time to get started, right? These things don't turn on a dime.
No, absolutely not. But great points made, guys. I would like to move on, if that's okay, to some other news. This one really struck my eyes. It's a space that I don't like, but it could be an opportunity for investors. Beyond Meat, they announced their quarterly earnings. They missed. Their stock tanked, but in their back pocket, they had an announcement partnering with McDonald's and Yum Brands, which is sort of Taco Bell, KFC. So, guys, if you're looking for some bad tasting manufactured food, you can get the McPlant burger and maybe a plant-based taco. So this doesn't seem to be going away, despite maybe the popularity not being so great if they're partnering with such big brands. Charles, your thoughts on this and the future of this industry, and this news that you may be seeing the McPlant on the menu at your local McDonald's?
Well, the joke writes itself. Think about it. Was McDonald's ever really meat? Was Taco Bell ever actually meat? So making it Beyond Meat. It was always sort of Beyond Meat, right? If Beyond is the right word there, just non-meat. I don't know. This is great publicity for Beyond Meat, but at the end of the day, there's a clientele effect here. McDonald's is more of a kind of an everyman restaurant. I associate Taco Bell with like what you get on your way home from the bar at 2 a.m. when you're drunk and hungry. That's just what's open. No one really eats there when they're not. Does anybody eat at Taco Bell when it's not 2 o'clock in the morning and they're drunk and hungry?
College kids, right? 10 tacos for $10. So.
But they're perpetually drunk and hungry.
That's true. That's true.
So, but anyway, I think this is great publicity for Beyond Meat, but I've been saying this for a while, and I guess I don't want to say I've been wrong. I've been early. I think that the whole plant-based food thing is sort of a trend. Diets go through fads. I think this is a fad diet. It may have some staying power, but I just don't see that going all that mainstream. And I do think the kind of person that tends to gravitate towards a vegetarian diet is perhaps a high income person and a knowledge economy worker, something like that. It's not the McDonald's clientele. McDonald's clientele is just, Joe America, right? So I don't see this working out for anybody involved.
Rodney, I haven't had the Beyond Meat. I don't know if you have. I had the Impossible Whopper. I found it less than desirable, and I had
impossible to tolerate.
Yeah, exactly. It had a funky smell. So I am not in favor of this, and I want my burger. But I would like to know what you think. Still here we are. I think Charles and I are sort of on the same page here, but yet these companies continue to strike big deals with big companies. So I don't think this is going away. What do you think?
I don't know, right? We're early in it. These are the first forays that we've seen into mainstream for this sort of thing. So I don't know if it's going to go away or not. I agree with Charles in that I don't see the huge demand from the outlets that they've chosen, because it seems like a mismatch of the person who would be pursuing that with the restaurants that they're in. But Tim Hortons took it off their menu last year because it wasn't popular enough to create a lasting thing or a permanent place on the menu. And so that's the question: will it stay there? Will it stay in general? Yeah, it'll probably stay. And I don't dismiss the idea that it's going to get better, right? These are the first ones that have been close enough to what they're trying to substitute for people to go, oh, okay, that's possible, right? Maybe it doesn't, hit the mark exactly, but that doesn't mean that iteration 6, 8, and 12 don't get a whole lot better. And we suddenly have some substitute for proteins that take a lot of energy, a lot of resources to grow. And so there's the lab-based meat, right? It sounds like a crazy creation, creating meat in the lab. But maybe 30 years from now, this is a very normal thing. And so
in Star Trek, they had food replicators, if you
right.
remember. They actually just created food out of nothing in a magic machine on the the Starship
They
Enterprise.
also had holodecks where you could make it anything you want. And frankly, why would you ever leave the holodeck? I never understood why people went back, but that's just so.
Question.
Well, we're all waiting for the day where we get to a non-scarcity economy when we all have replicators and holodecks, but that remains, I think, a little bit off from today. Charles, final thoughts. What would it take to get you to convert to a plant-based meal?
Starvation. If I were hungry enough that I was concerned about starving to death, I would convert to vegetarianism. Otherwise, not happening.
Rodney, would you have to be out in the desert, or what would it take for you to convert to a plant-based diet?
Plant-based diet would probably take starvation or no alternative, but a plant-based meal, free. I mean, it's like liking cold beer. If you told me that, hey, I walked into Burger King, which would be odd in itself, and I could get this Impossible Whopper for free, I might take a flyer on it because it was free, but that'd be about it.
By the way, the
first time, the second time I'm out. So
I'm sorry, go ahead.
No, it's just the first time I would take the free meal. The second time, not so much. If I don't like it, I'm not doing that again.
Yeah, and they are not cheap. All right, let's move on to some good news, both for investors and I think the economy. We've seen a rebound in airline and cruise line stocks as people are now starting to get out of their homes. Restrictions are being lifted, better safety protocols. I mean, I don't know about a cruise ship, but we're seeing airline stocks and both cruise ship line stocks rose over the week, which is, I think, a good sign, particularly if you're interested in investing in that space. And airline stocks can be very volatile, but could be an opportunity and a sign that things are getting better in the global economy. Rodney, I'll throw this to you.
Yeah, well, it's not getting better, right? This is all COVID related. And we remember where we were, right? And so last fall, it was this thing's going to last till 2022, and we're going to wear, all these different, hazmat suits and craziness and never open up.
Yeah.
And so Homan Jenkins in the Wall Street Journal, I'll give him credit here. He's been saying since last summer, look, for every person we know who has this disease, there's some number that had it or have it that we don't know. And so their first number was 10, right? For every person who has it, there's 10 more that we didn't count because we're not testing every single person. But as the testing increases, that number goes down because we're testing more. So it's no longer 10 to 1. It's now, they estimate 6.5 to 1. But we have 28 million, call it 30 million for round numbers, known cases. 30 million documented. That means another 180 million just in the United States that had it that we didn't document. So you add those together, you get to 210 million people in an economy of 330 million. And then you add on the almost 20 million people that we have vaccinated either with 2 or 1 shots. So you get to 230 million. That only leaves 100 million people, and we're doing 1 million people a day. Now, I understand the asymptotical curve, and we're not going to get to 100% vaccination of the people who haven't gotten it yet. But my point is, we moved to herd immunity really fast. And so he has been beating on this for months. There was a big story in the Wall Street Journal last week that said, look, herd immunity by April, that laid out this case. April seems soon, but now you've got the New York Times saying herd immunity by July. And these are the people who are saying it's going to last forever. And so I think what you're seeing in the cruise lines and other things are people saying, wait a second, we might be at a point of lifting these economic restrictions before the summer. And this is key, before Memorial Day, so that everybody can travel. That huge blowout spending is going to happen back to tourism. And so again, feeds the inflation trade, feeds everything. And so people are looking at it and going, man, the light's at the end of the tunnel for beating this thing. And that's fabulous. Really good news, as you said, for the economy.
Charles, what do you think of Rodney's optimism? Could this be a chance for investors to maybe get in on this? And are you looking forward to being able to travel back to the United States?
So the quarantine thing isn't all bad. I have the Pacific Ocean over there and the Andes Mountains over here, and I'm living in a little bubble right now, and it's not bad. I have a month-long supply of steak and beer to feed off of. So if the world never goes back to normal, it's okay. But no, yeah, I agree. You look at the curves. There's a great website called the COVID Tracking Project that has really great charts. I actually put some of them in my newsletter, which should be coming out well, really any day now. It's in production now. You see that the curve is just it's plummeting. You know, new cases are just in free fall. Hospitalizations are in free fall. Deaths lag, but the things you look for, cases and hospitalizations, are just dropping like a rock. And that's only gonna, well, presumably that's only going to get better. You know, with every extra person that's vaccinated. They're supposed to have up to 3 million a day being vaccinated by April 1st. I mean, that's huge. So you are looking at a scenario where there's nobody if the hospital beds are empty, there's no reason to have restrictions anymore. Now, I could go off on a longer deal about how I don't know that everything just goes back to normal. I think air travel goes back to normal for tourism, but not necessarily for business. Right. A lot of companies have figured out that, yeah, maybe I don't need to spend a couple $1,000s sending this guy to a meeting that last, an hour or two and then send them back. Zoom might be just fine. So business travel may never recover. We'll see. I also don't know that much. I don't know that I don't know that much. Wow, just not carve out that particular quote, but I don't know that cruise lines ever get back to their former glory, because the stats I've read on that show that cruise lines are actually pretty negative for the areas they visit. For example, in Venice, they like the government there determined that they're not really adding any value. The tourists that come off the boat don't really spend money in Venice. They don't buy a hotel. They don't really eat in the restaurants. They just come, take up space for a couple hours, get back on the boat and leave. They make it more difficult for the actual tourists that are staying there overnight. It's more difficult for them to spend money because there's all these cruise ship people just around. So there could be some longer, some of these destinations may decide, oh, I don't know if we want the cruises here after all. Maybe we just never bring that back. We'll see. I don't know. But overall, there is a lot of room for optimism here.
Rodney, before we move on, maybe airline, if you agree with Charles, maybe airlines up, cruises maybe not?
Well, I mean, they're both benefiting from the not dead yet trade, right? Where they didn't die completely. And so longer term, I mean, cruise lines have already popped. Airlines have popped some. They've probably got a little bit more to go. Just on the stock side, I agree with Charles in the business. I don't think business travel is coming back in the way it was, because it shouldn't.
And that's what pays the bills.
Yeah, well, exactly. And so I think the bloom might be off the rose for those two things, where their business might come back, but stocks are forward looking. So I think the gains that were going to be had from that quick pop are probably there already. If I was looking, I'd be looking more at hotels that serve tourists. I'd be looking for things that are beachside. I think they're going to have an awful lot of business from people saying, thank you, I can travel again and get my kids out of this house. And so I think that's a much better place to look for investment.
Great. And if you want to read more on this topic, head on over to wallstreetwirenews.com. We've got a couple of articles on the rising airline stocks and cruises as well, and how things have been opening up. I want to shift gears to another article on wallstreetwirenews.com. Can Lucid make a serious run at Tesla, another EV car maker who is supposed to go public, I believe, in next quarter of 2021. Now, this one it looks like basically a direct competitor to Tesla, sort of that upper market. One of the cars is about $74,000, and they have an even higher end one for $161,000. They're promising a 500-mile range. I think this is a nice looking car. Could this, Rodney, I know you're sort of the EV expert in house, so I'll throw this to you. Could Lucid be the next competitor that maybe can take Tesla down just a peg? What do you think? What do you make of Lucid and this announcement for them to go public?
If you look at the car, the guy who runs Lucid came from Tesla. And so he was a designer, right, from Tesla. And so it makes sense that the car has comparable issues in terms of, fit, finish, quality, and the interior, and kind of the coolness factor. And as you say, it's got better battery use in it. And so it's got a supposedly 500-mile range. on those metrics, yes, right, obviously. But in reality, no. Lucid is new. They're not going to start selling cars until later this year. It's going to make them late to the game. Can they sell some cars? Yeah, but can they be profitable? That's a much harder game to win, because you actually have to produce cars that people want in a significant number and make up for all of your fixed costs, which, by the way, Tesla has never done. They've never made a nickel selling a car. They make their nickels by selling emission credits.
Yeah, so what's the problem? Why can't Lucid just get into that game too and have their stock go to $1,000?
Here's the reason. It's because the people they are selling emission credits to will no longer need the emission credits. They're selling them to General Motors, which is bringing out all of their own EV products. They're selling them to, Stellantis, which is the renamed, Fiat Chrysler thing, and selling them to Ford. And all these people are coming out with their own products that they say they're going to move their entire fleet to. So they're either going to not be selling cars or not be, selling gasoline powered cars. And so either way, they don't need these credits anymore, which is going to hurt both Tesla and Lucid if that was their game. And so I don't think so. I think the big winner in this space, as I've said for a long time, is Volkswagen, the largest car producer on the planet, who has a $35,000 decent looking electric vehicle that's kind of rocking and rolling. I mean, Peugeot was the largest seller of electric cars in Europe last year. We'll even talk about them, right? So lots of different manufacturers out there in this game. And so Lucid is a cool looking competitor, but they are not the one that's going to kill Tesla. That's going to be the normal guys who have finally ramped this sucker up, and they get into the game with cars that people actually want to buy. When you think about that, regular looking electric pickups, that's going to be the game.
I'd love to have one of those. Charles, Rodney's not so hot on Lucid. I'm not hot on the name, by the way. I just think it's Lucid Motors. It doesn't really, I don't know. Tesla tells you kind of what it is.
Tesla sounds sparky.
Yeah, exactly.
Lucid, I don't know. It doesn't. But so no, I agree. Rodney actually made a lot of the points I was going to make. Tesla's biggest competitor is, I would argue, Volvo. Right now, Volvo was the first major automaker to really jump all in on electric, and already I believe every model that Volvo makes has an electric or hybrid version. I would say the other issue is Tesla has always been a cult stock, always from the beginning. Elon Musk has a quirky cult of personality around him. Cult of personality kind of has a negative fascistic like
Mussolini type thing. Yeah.
I don't mean like that. I mean Musk is benign. He is like a decent human being, but he has this cult following that will just kind of follow him anywhere, right? And so I think if Tesla manages to kick around and survive as if Tesla doesn't end up just getting cannibalized by the other mainstream automakers going electric, it'll be because they have this iconic founder, that has this cult around him. Lucid doesn't have that, and really nobody else does. So I'm not a fan of Tesla's stock price. I'm not a buyer, but I would say if anything is going to keep Tesla in the game, it's this really quirky, unique cult around Elon Musk, and nobody else has that.
Lucid, you need a strong man leader. And unfortunately, Charles says there's only room for one cult in Wall Street.
Everybody else has to drink the Kool-Aid.
Yeah, actually. That does it for this week. Thank you both for joining me so much. Thank you all for watching. I want to know what you think about the topics we talked about today. Rodney, as people head on over to wallstreetwirenews.com and want them to sign up for our free e-letter, what kind of things can they expect to see in their inbox on the financial side in the next week?
Yeah, it's going to be inflation and what people make of the COVID deal once it goes through. I also think that the noise is going to come on an infrastructure bill. And so once the COVID relief package goes, the next thing on the agenda for the Biden administration is to pass a really big infrastructure spending package, which is going to add to this inflationary pressure. And so, I mean, it's going to be roads and bridges and concrete and steel and copper and iron. I mean, it's coming.
Charles, what do you have your eye on, and how can people find your work? And as you mentioned, you had a newsletter coming out, is in process. So if people want to check that out and find that, where can they do that?
It's Sizemore Income Letter. Well, actually, where is the best place for that, Rodney? It's
Sizemore Capital, I think, is where they can find you and what you do.
Well, they can find me at Sizemore Capital. They can find the newsletter at hsdent.com.
Yep.
Charles, where's your website? Okay.
I don't handle fulfillment of my own newsletter. I have people for that. Come on.
So if you want to check that out, go there. And of course, we always want you to head on over to wallstreetwirenews.com, where you can get today's market in minutes. For Rodney Johnson and Charles Sizemore, I'm Dave Okenquist, and I hope you have a great trading day.